Hey traders, Jason here from Levitt Brothers. So breadth is starting to slightly improve. The market's not in good shape. The S&P just dropped 10% at a very rapid rate. It was one of the fastest 10% drops we've ever had. So make no bones about it. The market is not in good shape, but I'm starting to see some short-term signs that the situation is less bad. So I'm going to look at some breadth readings here, go through a couple index charts. There are signs that the market is resisting falling. And we have a tradable bounce is underway. All right, let's get to it. So here is the S&P 500 up top, and down below is the 5-day lows. Okay, just how many stocks are printing a 5-day low. So you'd think if the market drops here and this many stocks prints a 5-day low, that's like 3,500, 3,600. When the market drops even harder for several more days, you'd think that the number of stocks printing a 5-day low would be, equal to this or maybe even greater. But what happened is it actually declined. Okay, which tells you that on this like next leg down here, a lot of stocks resisted falling. Okay, so there was like 3,600 stocks printed a 5-day low, and then over here there was only 2,000 stocks that printed a 5-day low. So that means well over 1,000 stocks held their lows, resisted falling, and refused to go lower. So in the near term, that's a good sign. Okay, backing up, this is similar situation, same situation, but 1 month lows. We have the same thing. Market dropping. Last week it fell. It printed a lower low 3 out of 5 days, and yet the number of stocks printing a 1 month low started to dry up. Less and less stocks fell to a new low. They resisted falling. They were holding tight. It doesn't mean they were in great shape. It just meant that they resisted being pulled down by the market. It's a slight, sign that stocks just are exhausted to the downside. Sellers are exhausted. There's no more downside energy, or at least the downside energy is starting to decline to the point where the sellers can't take over a stock and push it any lower. Next up, same thing, except now we're talking about 3 month lows. Okay, so now we're talking about, this is March, so we're talking about going all the way back to, second week of December. Okay, how many stocks are, obviously the S&P right here is well at a 3 month low. It's at its lowest level, since, way more than 3 months. And yet the number of individual stocks printing a 3 month low has been steadily declining. So one by one, stocks are resisting the pull of the market. They're holding up. And finally, 52 weeks lows, same thing. Okay, so 52 week lows have also been declining. So, market falls hard and we get 800 stocks that make a new low. Market falls hard again, and yet only like maybe 450 stocks make a new low. Okay, so a lot of stocks held up, resisted going down. It's a good sign in the near term. Here are the Russell 3000 stocks above their 5-day moving average. Okay, you would think that if market falls hard right there, and there are, over here, there's only like 19% of Russell stocks above their 20-day moving average. When the market legs down again, you would think over here that even less stocks would be above their 5-day moving average, yet it held up. It was just still at like 19-20%. So even though the market fell hard for another 2 weeks, the number of stocks that dropped below this key short-term moving average didn't budge. It refused to go down. So a lot of stocks were holding up, and then this is a nearly a live chart. You can see that it broke out here, and now we have 76% of stocks are already above their 5-day moving average. It only took, one big move on Friday and then a little bit of follow through today. And what that tells you is that as the market was falling, stocks were moving sideways. And as they moved sideways, the 5-day moving average had time to move down and catch up to the price. And then all it took is one good day, and boom, we got 76% of stocks are above that moving average. Okay, so another good sign in the near term. Here's the same indicator with the 20-day moving average. We don't have the same bullish sentiment. We got a new low here, matches up with a new low here. Okay, so short term with the 5-day moving average, we definitely have some improvement showing, but you back up to the 20-day moving average and it's not there yet. Okay, so we'll continue to monitor this. If we bounce for a couple days, if we bounce for a couple days here, if we like come down and test and want to try to bounce up again, then we'll keep monitoring this, because we should not, on the next leg down, this should not be taken out. This level should not be taken out. It should hold up. We should get some sort of indication that stocks are refusing to move down. They're moving above this key moving average, and they're going to hold it. They're not going to lose it. Okay, so right now we're not getting anything out of this. We get some stuff from the 5-day, but we're not getting anything out of the 20-day. Now, looking at the indexes, here's the hourly S&P chart. You can see down, lower highs, lower lows. It kind of got batted back by the 21, and got above the 21, which is the orange one here, but then it lost it. Resistance there. It's all the way down. And like the 8 moving average, which is the blue line here, had been always below the 21. So it's like the definition of a trend. You get, they trend down together, and then the 8 tries to catch up, and then it falls off again, and it tries to catch up, and then it falls off again. So we finally got a cross over here. Okay, so number one, we got above the 21, which is which happened, but we held. Then the 8 crossed the 21, and now price moved above the declining 50. Okay, which is the first time it's been above that in since the top. Okay, now it's typically not a great buy when the price is moving like this and the 50 is moving like this, but it's at least a step. If the price can hold up, move sideways, move up a little bit, then the 50 can start to flatten out and then start to curl up eventually. And that's so right now we're just in the beginning phases. Maybe we have a double bottom in place. We moved up, 8 crosses the 21, using the 8 as support. If we can hold up here, then starting to see some less bad signs in the near term. Here's the QQQ, Nasdaq 100, double bottom, same thing, 8 crosses the 21 here. The 50 is still pointing down at a pretty good slope, so we need time. Okay, this needs to follow through to the upside. It needs to move sideways. It needs a little bit more time for the 50 to be able to flatten out and then start to curl up. Okay, otherwise it'll just go up and then lose it, and at best, you could consider this to be some sort of a base, but that breakout attempt there will be a failure. Last one, SOXL. So this 19 level was support here, and then resistance over here. Resistance over here. So we got above it on Friday, built on the gains, consolidated here just under 20, moving up right now. 8 crossed the 21. The 50 here you can see is coming down, is starting to flatten out, like right over here. The 50 is starting to flatten out, so starting to get some improvement here. Certainly better than anything that happened over here. Okay, semiconductors have actually been basing for about 2 weeks, so little by little we're starting to see some signs of improvement. Okay, so overall market's not in good shape, but in the near term, breadth is slightly improving. It's less bad than it's been. I could definitely see the market bouncing here. And once it bounces, then the burden is on the market. Like, can it follow through? Can we have a week where we're up 3 or 4 days out of 5? Can we, on the down days, can we resist falling back too much? Okay, the burden's going to be on the market right now. I kind of lead to the upside because I see improvement, but the market's got to prove itself before we get more aggressive. All right, hope you got something out of this. We'll see you next time.